In the next few minutes, I'm going to show you 10 daily habits that could turn your investment strategy from a passive passenger to a confident driver. Let's cut right to the chase. Successful investing isn't about getting lucky. It's about consistent, smart daily practices that compound over time. Habit number 1, morning economic scan. Every morning, spend 10 to 15 minutes reviewing key economic indicators. I'm talking about checking the latest unemployment numbers, tracking inflation rates, monitoring GDP growth projections, and the list goes on. I'll put a link to the Bloomberg webpage I use to see what economic announcements are on the horizon. It's a pretty cool resource as it allows you to include as many countries who have upcoming economic announcements as you want. I tend to leave it on the United States, but it's nice to see at times if there's something significant going on in the EU or the UK. So check it out. Every Sunday, I look ahead to the economic announcements coming in the upcoming week. This isn't just about knowing dates, it's about anticipating potential market movements. All that being said, here's a quick pro tip. You don't need to be an economist, just stay informed. Habit number 2, Treasury auction calendar review. Mark Treasury bond auction dates like their family birthdays. These auctions tell you exactly what's happening in the bond market. Online brokers like Fidelity and Schwab will have a calendar of all the upcoming Treasury auctions. Auction results can really drive a market. They are strong indicators of the market's depth and its underlying mood. If an auction goes poorly, it can drive rates across all product types, munis, corporates, treasuries, agencies, all of them. So you'll want to be on the lookout for upcoming auctions and the results. If you're able to, tune into channels like CNBC or Bloomberg and they'll give you instant auction results. Especially with things like the 10 and the 30 year, they can really drive markets. Next up, habit number 3, Federal Reserve communication tracking. The Fed's actions are like a financial weather report. Listen carefully because they're signaling market movements before they happen. The FOMC posts a calendar of upcoming events. Pay attention to this, and over time, you'll learn which ones have the potential to move the markets. I'll put a link in the description to the Fed's calendar. Now let me take you back to 1979, a pivotal moment in economic history. Paul Volcker, then Federal Reserve Chairman, made what seemed like a heroic move. To combat runaway inflation, he dramatically raised interest rates to nearly 20%. At the time, this was celebrated as a bold economic leadership move. Inflation dropped from 14.8% to 3.2% by 1983. But here's the critical perspective history often overlooks. Those same aggressive tactics contributed to the prolonged economic challenges, including increased unemployment, severe recession, and long-term economic instability for the working class Americans. The lesson? Bold moves have complex consequences. Always look beyond the immediate headlines. Let's get back to our daily habits. Habit number 4, bond market check. Treat interest rates like any of the indexes or stocks you follow. Spend 10 minutes looking for bond types you're interested in and see if there's much movement happening in their rates. Maybe you're trying to get a municipal bond with a 4% coupon around par. See how the market movement you're seeing in other areas like treasuries are impacting the rates that you're looking at. Here's a bonus habit most investors never talk about. Choose one day each month when the market's closed to review your portfolio without looking at current prices. What interest payments do you have coming next? Do you have gaps in your bond ladder? Was there a call announcement on one of your bonds? Did one of your bonds have a rating downgrade? And any other relevant information you find over time you think you should be checking. Why? Because this forces you to think strategically about long-term goals, not get caught up in daily market noise. If this video gives you at least one new investing habit, would you please give the video a like? You can make watching our videos a habit by subscribing and hitting the bell. We'd really appreciate it. Habit number 5, risk tolerance reflection. Ask yourself daily, has anything fundamentally changed in my financial life? Your bond strategy should flex with your life, not stay rigid. If you discover something has changed, be thoughtful and strategic if you need to make changes. Next, habit number 6, continuous learning. Dedicate 20 minutes daily to financial education. Read a chapter, watch an investment video, listen to a podcast. Even after 30 years, I still don't know it all, and I love learning new things, and I hope you will too. Next up, habit number 7, monitor Treasury market movements throughout the day. If you see a major market move, look into why it happened. Did some Fed governor or the president say something? Did an auction not go well? What was it? What are the talking heads saying on places like Bloomberg Television or CNBC? After 3 decades in this game, here's what I know. Patience isn't just a virtue in bond investing, it's your most powerful strategy. The market rewards those who can sit still when everyone else is panicking. Habit number 8, stay emotionally detached from daily market movements. The fun thing about bonds is, no matter what the market does, you're still going to get your interest and principal payments as expected. Remember that bonds are about stability, not getting rich quick schemes. Let's move on to our final 2 habits. And just keep in mind, these final 2 habits are not for every day, but for every day that you're putting in a trade. Discipline and perspective are key. So habit number 9, never invest money you can't afford to have temporarily locked up. More often than not, if you need to sell unexpectedly, you may not realize the return you were expecting, or you could even see a loss. Habit number 10, with each and every trade, check the likely tax implications if the trade does exactly what you're expecting. Would something like a muni bond give you a better total return after taxes? Always consider your after-tax returns because, well, after all, that's actually your return, the one you get after Uncle Sam gets his cut. Always consult with a qualified financial professional before making investment decisions. Your financial situation is unique, and what works for one investor might not work for another. Please see the description for the full disclaimer. Habit number 1, morning economic scan. Habit number 1. It happened to me last time. The clock started just as I finished a sentence, so there was like one note in my video. I'm like, I'm not redoing it. All right, let's head into our final habits. And these habits are for every day where you're putting. And these habits for every. Wow. Want to dive deeper? Check out these videos that YouTube thinks you'll love. Each one is packed with the kind of practical nonsense and no-nonsense investing insights you've just learned.